Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for Friday, April 29th, 2022. Well, yesterday those bulls had a rough start getting going, but they finally pulled through and gave us a little bit of a short squeeze relief rally. Unfortunately, big tech earnings have kind of disappointed this morning. So the question remains, can we follow through for a second day? It may be a challenge today. So how about we settle in? Let's buckle up. Let's get ready for the Friday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I do truly appreciate it. Let's take a look at these charts and see if we can gain some information about how we may want to approach the market for today. But just before I do that, guys, I want to make a reminder here. If you've seen the video out there on YouTube and Facebook, Hit Run Candlesticks and Right Way Options will be conducting an open house on May 2nd and 3rd. May 2nd and 3rd will be open all day. We get lots of questions about what goes on over there in our rooms. Well, we're going to open up the doors and let everyone have free access for a couple of days. So come on over. We're going to have a lot of training going on, a lot of information, and of course you can ask any questions and they will all be answered. So with that, make sure you take a look. I'm going to place the link to register for those 2 days just below the title of the video today, so that you can register and be a part of our open house. Hope to see you there Monday morning. Before the market opens, we get started. Let's take a look at these charts, and I got to tell you, we still have quite a challenge. Now, although that was a really nice relief rally yesterday, it didn't really help us out all that much because, unfortunately, it didn't break through any resistance levels in the chart. Now, we did hold on to this little support right here in the chart, which is a nice thing to see. But unfortunately, with so much resistance above, there's still a big question whether or not we can push through. And with those earnings reports yesterday, that might be a bit of a challenge. Thinking about us sliding into May, the old saying, sell in May and stay away. Well, with the Fed coming in to start raising rates, that may be more true this year than what we've seen in the last few. So you might want to keep an eye on that. Now, keeping in mind, overall, we still have lots of downtrending and things to deal with as well in the chart. So if those bulls can get inspired, let's look for this resistance up here. Let's watch that carefully. That's where we could get a rejection. If those bears, and they are feisty right now, if they continue to fight back, we could easily push this down through that area right there. So watch that carefully and closely today. Our technicals have not improved at all here. Obviously, we're still underneath our 50-day moving average, not looking so good here. And what's unfortunate is the Dow is the strongest of the indexes at the moment, technically. If we take a look at our SPY, pretty dismal here, bouncing back up, not really taking out any resistance in the chart. We have major resistance levels above that still need to be dealt with. Downtrends are still in play, and we have tested the lows here, but we didn't break through to the downside. So the bulls found some reason to defend here, but now there's going to be that question with these tech disappointments. Will they be able to hold that if those bears fight back? We'll have to wait and see. If the bulls can be inspired today, watch for that resistance right in there. That's where the bears could be setting up defenses ready to fight back. Watch that closely. And if we can breach up here, that would be awesome. A nice follow-through day would be great for the market, but we want to watch that closely if the bears come back in, keeping in mind that our technicals have not improved here. As a matter of fact, with our 34 EMA and 20 getting ready to cross down through that 50-day, we haven't really seen any improvement. We've had some worsening of the technicals. If we take a look at our QQQ, this is going to be the threat today, I think, with that disappointing result in Amazon, Apple, we had Intel looking lower yesterday. So obviously we still have a downtrend here in those tech sector stocks. Watch right in here this price support. We have price resistance up in this chart right through these levels here. And seriously, we have the bears, kind of the NASDAQ leading the selling here this morning after that, those tech disappointments. So watch that closely. If those bears really start to fight here and push us down, if we threaten to break this area down here, I would expect it to drag the rest of the indexes lower. So watch that closely if that were to occur. However, if those bulls can find reason to stay inspired here and follow through for a second day, watch these resistance levels above. And keep in mind, our technicals here are pretty darn dismal. Our 34 and 20 moving averages already crossing down through the 50 and that 50 declining. And notice that we could fail right here at our 500-day moving average and continue to move lower. Let's take a look at our Russell. IWM continues to struggle in here. IWM did fail this area right in here. We rallied back to test that level. Obviously, technicals here in these charts, not good in the Russell. If we can get those bulls inspired, watch right in here that possibility that we could push on into that level right there. But I think this level up here is going to be really challenging for us to get through at the moment. Now, if those bears were to come back and be feisty today and break this low, one of the things I want to point out to you is we have a big potential fall that could occur in the IWM if we can't hold this area. So watch that closely. If those bulls can get inspired and get us back up above that little area of price resistance, that would be awesome. If they could get up there and hold, boy, I think there's going to be a challenge to that, so watch that carefully. Let's take a look at our VIX. Now, our VIX had a little bit of breathing room yesterday, pulling back, but unfortunately it wasn't enough with such a big rally to really suggest there was a lot of buying going on. As a matter of fact, what was likely spurring the market higher was short covering yesterday in that short squeeze. And as you can see here in our VIX, we've got 2 days inside that big candle. So we haven't really improved just yet. We're still holding up here. Very elevated. We did slip just a tick below 30 handles in the chart, but obviously not a big confidence builder here so far. And we'll want to watch if we do pull back. If we do pull back, we want to watch this 25 area in the chart for support. If those bears get feisty here and push on up, let's watch for some resistance up in here. But I got to tell you, it could get ugly if those bears really come in hard. So watch that closely. I would like to say that we could go into a Friday without a big tech wreck, but fingers crossed, it may not work out that way. Then let's take a look at our T2122. Our T2122, well, this showed us that nice little relief rally. As I said yesterday, we're kind of overdue for one, and we did get that. At one point in time, we were pushed up here about mid-range, just short of mid-range on the day, but the selling right at the end of the day pulled that back down. So we do have some room here. If those bulls can be inspired, we have plenty of upside room to go if we can find some reason to keep pushing higher. But we've opened a big door to the downside as well now if those bears are inspired. So just keep a close eye on that. And our T2108, unfortunately, it rallied, and that was nice to see. We had that little bump up here, 37% of the stocks holding above their 40-day moving average, but we ran into this resistance area here, and at this point, we haven't been able to push through. So we'll want to watch that area in here. If those bears were to fight back in here, that could be pretty tragic here for the market. So watch that close. And our T2107, very much the same. We had we had just a little bit of improvement there in T2107, but unfortunately didn't break through resistance levels in the chart. So we'll have to keep a close eye on that. 32% of the stocks holding above their 200-day moving average. Our T2101, well, continued to stretch to the upside there, and that again is another one of those signals. If there was a good buying going on in the market, we probably should have seen this pullback, and we didn't really see that pullback yesterday. So I think what we really saw is a lot of short covering as they squeezed those out yesterday instead of a lot of buying. So be really, really careful going into the market this morning. Let's take a look at our economic calendar for today. We do have several things we're going to want to be paying attention to on that calendar for today. Notice we have personal incomes and outcomes here this morning. That'll be probably the biggest potential mover, and unfortunately, consensus is suggesting the personal incomes declined last month. So not only are we not keeping up with the rate of inflation, incomes may be declining. So watch carefully on that number this morning. We've got employment cost index and the Chicago CPI or PMI that will be coming out. Watch those. And then my favorite, one of my favorite indicators is consumer sentiment, and that's just taking the temperature of those consumers to see how they're feeling. Watch that one closely today, because with the way things have been looking in these numbers, it may not be a happy number, so watch that close. Let's take a look at our earnings calendar today. Now, we have a busy day on our earnings calendar, but it's less than we have dealt with over the rest of this week. So if you want to get the full list of the notables, make sure you click the link. It'll be below the registration link for the open house, but if you click that link, that'll take you back to the morning blog and you can get the full list. We've got a big oil companies reporting today. CVX will be reporting. We'll want to be keeping an eye on that. And ExxonMobil is in there for a report today. Keep a close eye on those. We've got Honeywell, so we've got some industrials in here reporting. Looks like that one's trying to move up here this morning. Keep an eye on that. We've got Colgate-Palmolive. Looks like they have disappointed and looking lower. BMY will be an interesting one to pay attention to. As we saw yesterday, Merck had a really good report pushing on up, but it looks like BMY might be disappointing here just a little bit this morning, so keep an eye on that. We've got Bloomin'. Bloomin's looking good here as those restaurants start to pick back up, so keep an eye there. And we'll also hear from Weyerhaeuser. So watch those closely today, and again, make sure you click that link to get you back to the blog for the full list. Let's take a look at some stocks that could be setting up for today, guys. But before we do that, if you could do me a quick favor, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube, and then also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful and helpful, please do me that favor, also clicking those thumbs up buttons, leaving a brief comment. I would truly appreciate it. It helps the channel to continue to grow. And thank you so much for everyone who does take the time to do that. And also thank you so much for everyone who continues to support the channel through Buy Me a Coffee. You guys are truly awesome, and I really appreciate it. Now, let's take a look at some of these stocks setting up. And please keep in mind, guys, these are not recommendations to buy or sell any security. As a matter of fact, you're going to have to do your own due diligence and make sure that these fit your trading style and your trading plan. And I have to tell you, if you've been suffering a lot of losses recently, it may be time to just stand back a little bit, let this market settle out, let some of the dust settle, and then maybe come back in when you have a better edge. Be careful in here. I haven't done much trading at all this week just because of the danger in this market. What I have done is done some really quick in and out day trading just to generate some capital, but honestly, it has been a very challenging market and is likely to remain that way as we slide into May. So let's take a look at a few of these that may be setting up for potential trades. If we take a look at stocks like Goldman Sachs, Goldman Sachs, obviously, financials have been looking pretty darn bearish and continuing to move in this downtrend. And as you can see, Goldman right here sitting right on the edge of a cliff. If Goldman were to fail right in this area, and there is that possibility that we consolidate out here just a little bit more and continue to fail, there may be some short trading in there. And I think you can look at a lot of the financials and see the same kind of patterns and possible more short downside on these financials. Keep an eye on Citibank. BAC has been particularly bearish, breaking to new lows and then just resting here again. Pretty big opportunity that could just continue to fall. And you'll want to notice here, these are some pretty big support areas in the chart. If they break, could be some good shorting in there on some of those stocks. So watch that closely. You may also want to take a look. Now, we're getting a big downside move in Amazon today. With guidance lower, and as you can see, this is giving up huge areas of price support in the chart. Now, I wouldn't chase this to the downside. What I'd want to see is a little bit of rally back. Give us a rally back up and look for that opportunity maybe to short there in Amazon, or bear call credit spreads, anything like that, to pick up some downside move in that, because I think the summer could be challenging here for a lot of these sellers. So watch that closely. Now, places where you can still find some bullish price action is going to be in the defensive sector. Take a look at Coca-Cola continuing to run in this nice upside move. Big bullish engulfing candle yesterday. Moving to the upside, I would watch for an opportunity here in Coca-Cola. PepsiCo was also a big upside mover. Looks like it gapped and pop and drop on the morning here on PepsiCo. So watch that, trying to break through this resistance. Watch for that next potential entry there into PepsiCo. I've been keeping an eye on CLX. And you guys know I've talked about this one a couple of times. Unfortunately, this is going to report on 5/2, so there's probably nothing we can do with it at this point because of that report. But you might want to keep a close eye on this. This has been moving up in this nice trend. I was hoping we would get a move prior to earnings up in here to maybe fill that gap, and it just hasn't happened. Be a little bit dangerous jumping into it right now, but watch that closely. You might want to take a look at stocks like WDC. Now, WDC got through its earnings yesterday, and a little pop and drop on the morning here, but notice we're moving, trying to pick up here in this little upside move. A little rest, a little consolidation in here could set up that opportunity here to the upside. So even though there is a pretty big tech wreck going on in some of the big stocks, this one might be coming around. So I would keep an eye on it, and notice we're up above our 50-day moving average, providing a little support. So watch that one closely. There may be some opportunities there. Still could be some struggling. Take a look at First Solar. Now, First Solar had earnings report yesterday, and it looked like it was going to be moving up, and then we end up with the conference call not providing a whole lot of inspiration. So what I want to point out here is this is in a downtrend, clearly in a downtrend, and you can see this nice little consolidating, a little bit of a rally back pattern. What you want to watch here is for that next potential failure to the downside, and be looking for some targets down in here. For solar, not looking so good. And you would think that these would be perking up and doing a lot better than they are, considering the cost of oil, but yeah, not so much here. So keep a close eye on that. You might also want to keep a close eye if you're looking for long. Take a look at stocks like Archer Daniels, anything in the commodity sector, food sector particularly, holding up quite well. So notice we broke some support here in that chart, and we're still trying to test whether or not we're going to be able to push back up through there. Watch that closely. If it can push back up through there and hold, there may be some upside opportunity there in Archer Daniels. Watch that carefully. Take a look at Hormel. Hormel Also moving back up. It pulled back pretty sharply, but moving back up, holding on to some support in here. Again, food, consumer defensive, those continue to be very, very strong stocks. Some of the retail out there that are in that defensive sector area, like WMT holding up and may have that opportunity to move on higher. Saw Target was kind of trying to hold in here yesterday and may have that opportunity to move up. Notice we've got this trend going on in here. What I think we're seeing in all of this defensive sector stocks, guys, is I think what we're seeing is that the institutions have rotated. They've rotated from tech, and they're rotating into more of these defensive names, dividend payer names, to ride out the volatility. So keep a close eye on those. You could also take a look at stock like Dollar General pulling back to hold some support in here. If that can fire up in here, it might be an opportunity in Dollar General. DLTR also doing the same. So there's a few ideas for you today. I would be really, really careful. Watch carefully if those bears start to attack today, particularly in the NASDAQ. If they are able to push us back down through the lows of this week, it could drag the rest of the market lower. So just be very, very careful. Everyone have an awesome day. I want to wish you all of the best in your trading, and we'll see you right back here bright and early Monday morning. Take care, everyone.